What's going on YouTube? In this video, we're talking about Copart, ticker symbol CPRT. Year to date, this company is up 49% over the course of 1 year, 65.5% up. Currently, worth noting, this company is trading forward looking at 32 PE, so could tell you out the gate, potentially a little richly valued already. So Copart provides online auctions and vehicle remarketing services relatively worldwide in several different countries here, and it offers a range of services for processing and selling vehicles over the internet through its virtual bidding and third generation internet auction style sales technology to vehicle sellers, insurance companies, banks, financial companies, charities, fleet operators, all sorts of different people willing to sell and buy vehicles. You know, if bank repos a vehicle, they might have it auctioned off on Copart. And insurance, if it's a totaled vehicle, same thing, they might have it auctioned off on Copart. And Copart does have some solid ties with insurance companies, so they constantly get insurance claim vehicles that are getting sold on Copart. So over here on the financial side of things, I mean these first few charts are like picture perfect. You just got some very consistent upward revenue growth, gross profit growth, and net income as well. And net income, whenever you see net income trending relatively closely to gross profit, is very nice to see, very attractive. You can see our net income here on its own chart growing very well. Gross margin at this company is sitting, mid 40s here. It is relatively flat but slightly grown in the course of time, which is good. Net margins, same thing, kind of sitting about 32% right now, and has grown up into those 30s and sat there for the last few years. So pretty good net profit margins there. Revenue, gross profit, year-over-year change. It looks like it's starting to slow down a little bit, this company, but we've seen that before, and then all of a sudden it picked up and then starting to drop back down again. We'll see if that can maintain a 10 to 15% growth rate or not. Return on invested capital, perfect. Above anything, really, in my book, anything above 15% is a good return on invested capital. Cash and short-term debt, they have boatloads of cash in terms of short-term debt. They've only got 493 million in short-term debt and 2.3 billion in cash. And then you have your total liabilities to cash, and this is awesome to see. Look at that cash just getting accumulated, and then basically no liabilities. So if they wanted to tomorrow, they could pay off every bit of debt that they have. Net income to free cash flow. Look at this growth rate. It's just so clean, so just picture perfect for a company. You got net income 1.2 billion, your free cash flow 848 million. Free cash flow, you can see your growth rate over here. Again, just very nice. Share count dilution. For some reason, these shares are actually cut in half. They're sitting at about 970 to 50 million shares range. So this is the current share count, roughly 970 million shares. So for some reason, this is incorrect, but we do know that 970 million shares is roughly where they're at, and they have not been adding too much to their share count. So it is up a little bit, but not much. Capital expenditures here, pretty good, pretty well maintained for a company that does, 3.8 million or billion in revenue, and capital expenditures is only sitting at about 500 million. So I guess that's respectable. So overall, on the financial side of things, this company looks very well ran and is producing a lot of cash. So I only really found two other companies to compare to. We have RBA and KAR. On Copart, we have three red flags. Our share change year over year, which you can see shares outstanding currently sitting at 957 million. So we're in that 957 to 970 million range, but has increased year over year by only 0.25%, less than that. Operating cash flow is slightly higher than net income. Not too concerned about that because there is a little bit of stock-based compensation factored into that. So not a big concern. Price target for analysts is $43. We are currently trading at $45.75. So another sign that we could be overvalued on this company right now, but rightfully so based on those financials. Looks very good. We have market cap, revenue over here, market cap on the left, revenue on the right, and definitely the leader for market cap. Revenue, gross profit, net income, you can see where we're at, kind of in order in companies in terms of leaders. Growth rate, Copart sitting at about 10% growth rate on EPS and revenue. RBA has looking like a pretty substantial growth rate this upcoming next 5-year growth rate roughly is sitting at about 34.72%. That could be skewed by 1 year where maybe it's only sitting at about 10%. Maybe this next year it's going to be like a 200% grower, and then after that it'll be like 15, 20%. That's possible. That's probably likely. Gross margins. Shockingly, Copart is not as good of a gross margin as the rest of the competition. However, we start going over these other profit margins, and we can see operating margin leaps and bounds better than the other two companies. Same thing with profit margin. They are really the only company. I mean, look at that, 32%. The next person, RBA here, is sitting at 6%. So doing really good on the profit margins for sure. Free cash flow, same thing. Return on invested capital, PE. So currently trading at a better PE than RBA. Still a 34 PE. This company is not like a growth company. This company is more of a stable company. So I think a 34 PE is definitely a premium on this company just based on the PE and the financials and how it's trending overall. Over here at the calculator, we have Peter Lynch valuation, $21.67 per share. Multiples comparison. So KAR is not profitable, so we have to remove that to figure out, okay, in comparison, we are worth $94.78 comparing just to one other company though. Manual PE kind of telling us we are very richly valued. We have market cap minus cash plus debt divided by cash from operations gives us about a 31-year forward-looking PE there. So pretty richly valued. Anything over 25 is overvalued. Price to book, 5-year average 6.24, price to book 7.3 currently. So again, still richly valued. PEG ratio, not quite really much of a growth company, obviously, because our EPS growth rate is 16%. Revenue less than 10%. So we're starting to trend lower into more of a stable, maybe 10% grower going forward. Graham's valuation here, I gave them a 1, could give them a 2 for being more of a stable, mature company. If we do, it gives them a price tag of $46.80 per share. I think they could be more like a 1.5. So we'll give them a 1.5. Intrinsic value then is $37.51. Discounted cash flow. Analysts have a growth rate on the free cash flow of 27%. I match that. They do. The average growth rate is 22%. So I believe, based on what they've done in the history of this free cash flow, that as of lately have exploded in free cash flow. That gives them a discounted cash flow price per share of $37.33. Rule 72. We have our current EPS and PE. We have 3 different sources for an EPS growth rate for an average of 18.4% growth. And the EPS side of things, that goes into 72, 3.9 times. That goes into 10 years, 2.5 times. So we could double our EPS 2.4, well, 2.6 times basically down here. So I gave them a current EPS. Actually, that's going to be higher. So we get to double it, not once, twice, but 0.6 times. So that could be more of an 8 for a forward for Rule 72 here. So we'll give them an 8, and that gives them a fair value of $73.89 per share. So for our summary here on Copart, we have currently trading at $45.75, analyst price target of $53. We got a fair market value on this company of $53.04. 30% margin of safety though is $37.13. So if we want to capture at 30% margin of safety, we got to wait a little bit and see if this thing wants to pull back about $8. But in terms of our fair market value, what we got, we have a little bit of wiggle room to grow into our fair market valuation by about $8 there. And based on the financials, this is one you maybe want to be consider overpaying for, because not overpaying, but like I don't think you're getting a 30% margin of safety on this company based on their financials, because they're financially very, very healthy. Just based on this cash to debt here, they've got a very strong balance sheet. They've got, so much cash to cover their current liabilities. And obviously their free cash flow here is not shrinking. Capital expenditures aren't growing at a stupid rate, so their free cash flow will continue to grow as long as their capital expenditures don't continue to grow beyond their free cash flow. Return on invested capital is solid. All the all the margins are very good. So overall on this company, I really like it. I like this is a good, strong financial company, and currently trading at below a fair market value based on our analysis. So let's hop over to the stock chart and see how this thing is trading. So on Copart, we're on the weekly chart. They were trading at about $26 a share about a year ago now, and since then they've just rallied higher. So I think Wall Street has maybe caught wind of how this company is doing financially, and obviously they're buying it up. So potentially missed out on a good move. Maybe we get a little bit of a pullback to like $40 per share here to a potential support range. I think that would be a fantastic buying opportunity on this company. We can see over the long term, this company just continues to trend higher and higher and higher. So every time it does make a pretty solid move up, we do see a little bit of a pullback. It appears to me like we might be in that transition here, although it's not looking like it's going to get much of a pullback. So we'll have to wait and see. If we do get a little bit of a pullback, it'd be nice to see, because every time you see it ran up, pulled back to support, ran up, and pulled back to support again, which was this was a different scenario, but ran up, see if we can get it to pull back to about this $40 range, and then I think that would be, I'd put that as an alert on your stock chart if you are interested in this company. If this thing hits $40 per share, I think that is a good time to buy up Copart. But that is it on Copart. Found value in this video. Drop a like, subscribe, comment, and we'll be back later with another stock analysis video.